Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, June 23rd, 2022. It is 2:05 p.m. Eastern Time as I'm starting the video, and here's what we're going to cover in this order. We're going to take a look at the equity markets. I'm just going to walk down from the weekly time frame all the way down to the 5-minute time frame, but I'm not going to spend a lot on each and every chart. And then I want to roll into sector analysis. From time to time, I like to dig down in the markets, as I like to say. An index or any sector is simply a sum of its parts. So when you look at the stock market, if we're using the S&P as a general proxy for the U.S. stock market, the S&P 500 consists of 11 sectors. So I'll cover those as well as a transportation sector. Because even though that's not one of the 11, it is. We had a couple questions. I have questions from multiple subscribers about transports recently, and there's some things worth sharing there. So we'll get to that last. All right, big picture, QQQ. This is the my bull market uptrend line right here. It's still a long-term target. That's not what I meant to do. That comes back from the 0809 lows in the Nasdaq 100, and we zoom in nice and tight. I still believe we'll get there, and to me, it's just a matter of how and when. In other words, are we going to have a tradable bounce? And we've had a bounce so far. Well, last week, our covered shorts reversed to long, and maintaining that long bias now. But I'm ready to, or not ready, but I am willing and ready to change. Yeah, I guess ready is a word, to change my outlook if the charts present, because again, this is a bear market. Bear market rallies, they're extremely profitable to trade, but they tend to happen fast. And the key is, don't stay too late to the party. You don't want to be the last one out, because you're the bag holder, and once it's over, things end pretty quickly. You saw that there, you saw that there. Impulsive selling after these two. We had two decent bear market rallies, really this one here as well. Each and every one was followed by a very impulsive leg down that would have quickly, if you didn't book profits, some or all would have wiped out all and then some. So that's where we're at. As of now, we're holding T3. Remember, this is where I once again covered and reversed on that third target on QQQ. You can see last week's candle hit almost to the button. And then, of course, you have the S&P 500, also a key index, a little bit above the long-term target, but QQQ is my go-to index. It is full of the market-leading stocks with the top weighted heavy weighting on those market leaders: Apple, Microsoft, Amazon, Tesla, Alphabet, Meta, and so forth. So it's a pretty good proxy of the overall health of the market, because when the market leaders are dying, the market dies. And when the market leaders are being bought up, then the market's going to go up, even if some smaller sectors are falling. Sectors that don't have as much of a weighting is a lot of those big tech names. All right, so that's it. And then we're going to walk it down here. Daily chart. Remember, we had that's aligns with my third target on the weekly, and we had this. And again, this is I can still maintain and make a case, and I'm still leaning towards a substantial rally. The word substantial, I'll define that as a multi-week to a multi-month rally with potential of about, what did I tell you before, if we head up to this trend line in these 200 days, maybe as much as close to 30% possibly. But again, it could end anywhere. It could end where we're at right now. That's not my take, but if my take changes, I'll let you know. So let's dig a little bit deeper into the charts. Let's walk down to 60-minute chart. Busy chart, but this is how we started swinging this thing down back in November, targeting all these targets, and then I kind of moved over and focused on that weekly chart. We've also had upside targets to game the counter trend rallies, but you can see, just like the daily, we had positive divergence right here on last week's lows on the 60-minute chart, and this was a major reaction low. Remember, that was I'm going to call it the Maui low. When I was on vacation, we had to undercut the lows, but then recovered it that same day, aka bear trap, and had a nice tradable rally afterwards. Went up and hit almost my fourth target there, and that T3 zone, which we hit, aligned with, I think, the third target on the futures that I had NQ. And that was actually the third and final listed there. And then that last leg down, and now here's what's happened. So I know it's a lot of lines on here, but so far you had a similar thing. You had support right here undercut those lows and then regain those. And so that, as of now, as long as these lows hold, then that has the potential to be a bear trap, also a selling climax. Bear trap suck in, more shorts, and then those shorts get squeezed out. So here's the levels. We recovered it. That's still a big level to me, and that's really, I want to see that hold at worst case scenario. But you also have, remember that previous, I'll call it the Maui low right there, 280.75 was resistance, and that's what we've been doing. We've been holding in this pretty tight trading range. And remember, I talk about these trading ranges all the time. That was the last one we had, and they build up. When you have these tight compression ranges, it's like a coiled spring building energy, and then whichever way that breaks, in this case it broke to the downside, that's likely going to be the direction of your next trend. So respect the downside break. There's a lot of gaps here, and that's going to bring me down to that 5-minute chart. I covered this with you the other day of all these boxes. This one's colored orange right here with that gap. Then you have all these gaps that I highlighted. I went over just how well traders are focused on these gaps, and you can use them to trade off of. You can, once you enter a gap, you're usually going to hit the top of the gaps. You go for gap backfill. If you are above a gap and you pull back, the top of the gap will often act as support. If that's taken out, then the bottom of the gap, etc. So the top and bottoms of those gaps tend to act as support and resistance. So we're going to zoom in real tight here on this 5-minute chart of QQQ. And here's our most recent gap right there from, what was that, the yesterday morning's gap down right there. You can see, and I have it drawn at the bottom. Again, like I said, gap drawing is sort of subjective. Technically it's where you close to where you open the next day, but a lot of times traders are going to look at the last closing candle. So in this case, you can see I put the lines here on the bottom of Tuesday's candle, and then the top of Tuesday's closing candle, and then the top of Wednesday's opening candle, and that gives you this box right here. The top of that box is right here. And that was today's pullback, and actually every day. So you can see, since we had that gap, and once we recovered the gap, they tested the top once, multiple candles there, and so far today. And so that's a level to watch. That's support. If that support breaks, then you're probably going to then backfill the gap, and otherwise, again, we have this little coiled spring thing going right here. So watch now these recent highs right there. Those highs are about 285 and a quarter or so, and that if and when popped, that's most likely going to be a breakout. I'm going to speak to that real quick. As I was typing up today's earlier post, got that chart out to you on the 60-minute chart. I told you I've been watching the 11,705 level when the alert triggered. Right after I started, right before I took the screenshot on that 60-minute chart NQ I got out to you this morning, the alert triggered. It made my level go away, and you can see I can drag it. I can't get it exactly back on 11,705, so I just had it on 11,707, close enough. Anyway, so I always talk about a solid break or a 60-minute close. And so as I was typing, we had just popped the level, and basically it didn't stick. It wasn't what we call a solid breakout. In fact, you did have this previous reaction high, and that's what we got checked on. So right now, technically, you'd want to move that line up to about 11,745. And here, I'll do it. Let me just grab one. I'll just put a new line there, because that was where we failed today. In other words, there was a brief intra-period pop. The 60-minute didn't close above it, and so that is still resistance. So it's no less significant than it was before. As I was typing, like I said, it just was marginally above there by like literally a tiny fraction of 1%. So I probably should have said, hey, make clear you want to see a solid move above there, and that still is the case. You can see we've had a lot of reactions. This thing is building energy, and we're walking up. So really what you have here, take away all these lines that I drew, you have a what's called an ascending triangle pattern. So you have resistance at the top at about 11, whatever I just said, 11,750. We'll use that level right there. Let's use that top line. Again, 11,750. And then you have an uptrend line here that's pretty significant. That uptrend line on the NASDAQ 100 futures comes off the recent lows, and you have three distinct reactions. You can see how I have it drawn there. Sometimes when I grab this little drawing tool in the video, I'm not always right on the line, but there it is. So 1, 2, 3 distinct reactions, and then up top, that should be the yellow line right now. 11,750. I'll probably set another alert there, and that's it. So the way it works is, so far we're holding. This was a level I had before here, this yellow line that's contained the pullback, but ideally I want to see this uptrend line hold. But if not, there's that comparable level I gave you on QQQ a minute ago, and that's 11,288, call it 11,290-ish right there. And that's it. So we're grinding around. If you are an impatient trader, if you don't like what's happening in the last few days, if you're getting stopped out, you're trading too tight. I told you I've morphed into more of a swing trading mode than active trading mode lately. There's plenty of money to be made active trading. The market's still swinging up and down a good 3% a day in most days. But by swing trading, that will allow wider stops in trying to, hold out and go for the prize here, the bigger move, which on this 60-minute chart, let me flip it back over, give you 2 month, right here. I've added a few. See these blue levels? I added these today. They are minor resistance levels that may come into play. I'm not super crazy about this one, but it's about 12,000. But here, this is the target I gave you, near-term target if you're swinging NQ, which I think will be hit in relatively short order if we pop that recent high, which again now is 11. Gosh, what I just told you, 11,745 or whatever that was, right here, the recent highs, today's highs, yesterday's high. Pop that, that's probably where we're running, but you can see I have a little bit of resistance here, about 12,290, 12,370, and then the big level there is about 12,452. And so you can call it a target zone. That is the most significant resistance, but you have a couple reactions here. You had these little flags going on. This was a bull flag, this one here, and that was a bear flag. And so traders are going to eye those levels as well. So the minimum, okay, let me just say this. If we get that breakout I'm talking about, then the minimum swing target there is about 12,289. And what I'll probably do is, just as it gets close to that level, trail up stops, maybe on partial, but let some of it run. We may get an initial pullback there and then go on up. I think we'll work our way up there. And there's certainly the potential for more. Again, this is just near-term stuff on the 60-minute chart. A minute ago, I showed you on the daily chart what my final swing targets will be if we get up there on QQQ. I'm going to, in a different video, or in some charts, go over the flip side of it. Actually, we'll do that now. We're going to get into the sectors. Let's just roll into the sectors, and you'll see, case can be made that maybe this is just a little dead cat bounce here, and we are going to take that final leg down and hit my final target. So let's take a look at some of the sectors in the S&P 500. And we'll just go to 2 time frames here to paint the bigger picture, daily and weekly. I'm on a weekly chart now. We're going to go down the sectors of the S&P 500 in order of their weighting. So the most significant, remember, as I get to the bottom, and I may even skip some of those, they don't move the needle as much, like basic materials and REITs, just because they have such a small weighting in the S&P 500. This is the 800-pound gorilla in the room right here. It's the technology sector. And this is important. This is why I want to do the video. So I maintained this, flip to a near-term bullish bias last week, right? And you can see here what's given me a little bit of pause, and it's not just XLK, but again, XLK has a big weighting. This was one of my targets right here, 128 on XLK. It was what I'd say pretty decent, solid support. Bet I'd rate it better. I always like to rate support 1 to 10. Maybe about a 6 or 7, solid 7, I'd say, somewhere in there. Maybe even an 8. Pretty good reactions. And so far, we've had a reaction. We've had several reactions. Now the thing is, we've had 1, 2. We hit it 2 weeks. Remember, we gained that bounce right there. And this was a key support level. It broke. We hit that target. We bounced already. The fact that we hit it a couple times, once you've had the reaction on it, the next time around I expect it to break, and it did. And it's back testing right now on this weekly chart. So this, guys, this is what's giving me pause right here, and why I may pivot back to a short. This is a strong move down right there, an impulsive move down. And this is potential flagging action, and it's flagging. Remember, support once broken becomes resistance. We're trading right now at 127.65. I have the support around 128. Close enough, we're on it. And so that's why if we can push up a little bit here, then this proves to be what I call a momentum fueled overshoot, where you have a lot of downward velocity going into a support level. So you overshoot it briefly and then snap back above it. But we haven't regained it yet. So at any minute now, any hour, depending on what I see, I'll close out longs and or jump back into shorts as far as swing positions go. Right now I'm sitting tight, but again, I'll let you know. And then again, it's a matter of, are we going to have a decent rally and then get down here? My next target's 111. It's a pretty good target. I think it'll be hit. I have a high degree of confidence. And then the primary uptrend line, which comes all the way off it's my bull market uptrend line. And all this, the media is already calling it a bear market. To me, it's just, it'll be a bear market. It'll be 43%, or, well, maybe, again, see the way this works too. I look at these charts, and I'm going to move this here. See how over time the trend line comes in at higher levels. And I've said it all along. I don't think this is the 2008, the October of 07 to March of 09 bear market, which was over before you knew it. It was a painful one, but it was over in about a year and a half or so. This one I think is going to play out slower. I think we're more in a Japan, 1980s, 90s scenario, the lost decade they call it. It's really the two lost decades. And I think we're going to play out and take a while to get there. And if we do, we could come in here. As you can see, that trend line comes in with the 111 price support in early the first quarter or so, about the end of the first quarter of 2003. You can see down here below. So again, it could happen that way, or boom, this could be a little bear flag and we just go down. And look, if you look at the measured target too, this is interesting. I didn't notice that until right now. I'm going to take that. Take the, let's just measure from the top of that candle there. That's where it was pretty impulsive. And you take the measured target, you add it to the top of the bear flag, which would be right about here. That gives you a perfect measured target down to that 111. So this is the, hey, it's going to happen quick scenario. And then this is the, oops, tried to give you an arrow tool, run up, test that level again, test the 200s again, and then go down. All right, I've already said which one I favor for now, and that's the more upside, but just don't get married to any bias that you have in the markets, or it'll wipe you out in the bear market, especially. XLV healthcare. So here's an example. Very, very solid. This is closer to an 8 or 9 for support. Very good. Divergent high. Everything was priced in. I've covered this a million times. Been bearish in short since last November when the Qs topped and shorting the tech and small caps, and then said other sectors were holding up, and then they followed. But you can see healthcare so far right now. You have the early makings. I got to be careful there and say early makings, because this is a weekly chart, of a stick save, meaning we went down below, right? Momentum fueled overshoot, and you can see this candle right now. We are above that. I have supported at about 124.63 or at 126.38. The week is not over yet. A lot can and will probably happen between tomorrow and 4 o'clock. But there's a potential for a stick save there. And there's also the potential that this is just a breakdown, which that was last week, and now a back test, just like technology is back testing. So I'm in the camp that if I'm wrong on this multi-week, multi-month bounce call here, and right on my alternative scenario that we're just going to crap out soon and take another leg down, and I said this last week, I've said it several times, I think it'll be pretty quick. I think it'll be that catch a lot of dip buyers here off guard, and that's why I'll try to adjust as quickly as possible, because I can see the potential for another drop. It would probably have a lot of forced margin selling, and it could be a quick move down. All right, let's go on a little quicker. Financials. Again, this is a common theme. These are big support levels. These are targets I've laid out weeks, even months ago. XLF is a financial sector ETF, had really good support there, broke it, back tested from below. That was a golden shorting up on the back test. And when we came and we're still trading, we overshot it. and we're close. I have that level at 31.35. Remember, it's a weekly chart, so give or take, and we're at 30.82. So we're really still just a hair below that level after breaking below it. And so if you can recover it, great. There's some resistance overhead here. If you can recover it, then you've held support and it was just an overshoot. Otherwise, this could also be some flagging type action. And I'll tell you, the way these flags are shaping up, maybe we go into tomorrow and the market relatively holds up, and then these break down next week. So it could be that soon if it's going to happen, or we recover and then we can have it'll start to firm the charts up. Because when I go back to the daily charts, remember this is my XLF. I give you these targets way back here, shorted there. First target was hit. Like I said, we never exceeded a reasonable stop, even though we had put in these additional marginal new highs. They were divergent highs, and we hit my second target and third target. But you can see we're right below it. 31.35 is my third target on the daily chart. And we appear to be also flagging here on the daily chart. I mean, it's the same chart, but so we could head lower, and we could head lower soon. My next target, if hit, is about 28.88. So that's it. So the takeaway is we're just really holding on by the skin of our teeth to a lot of support levels, and in many cases we're a little bit below, somewhere a hair above on some of these sectors. But again, I like the fangs look pretty good to me. A lot of the market leading stocks, and that's one thing that's kind of pushed me over. You got to pick a side. And if I can't, there are times I tell you, hey, I don't have a strong opinion. I don't have to be long or short anything at any time, any point in time. If I don't like the equity markets, guess what? I'll trade natural gas and crude oil and lumber and soybeans or gold. There's a gazillion other things to trade, so I never try to force a trade. Communications is in a precarious technical posture. It already took out the pre-COVID highs right there from early 2020, and it's below those. But this is really just two stocks, Alphabet and Meta, the former Facebook. But like so many things, all these big fangs in this ETF, the communication sector that's made up of those two, is nice bullish divergences, and that's what's keeping me long at this point in time, and bullish, cautiously long, we'll call it. XLY, and I'm kind of toggling back on time frames. I'm still on a daily chart here. See this? Just so many divergent lows, positive divergence on the daily time frames here. And when I look at the weekly chart, this one, consumer discretionary, has held support. There it is. 133 was my target. It was hit to the button right there. That was the pre-COVID highs. So here's a sector that hit my, what I'm referring to as my initial bear market targets. My initial bear market targets, well, where I think there's going to be a tradable bear market rally lasting weeks, maybe even months, several months or more. Could be 6 months. Who knows? I just think it's going to be more than just a few days, longer than the other bear market rallies we had. If we can get a little more upside and start to firm up and get all these sectors above these support levels. And then later on, I think we'll hit some longer term targets, which I'll lay out when the time's appropriate. XLI industrials, there it is, very good support level. See this pre-COVID high right there? There's another sector hit the pre-COVID highs. Keep talking about those. Was talking about those months ago as my targets on the indexes and a lot of sectors, and it was also support here, and boom, we hit it, and we're pretty much on it right now on XLI. So there's another sector holding support at support while oversold on the weekly chart. Last time you were oversold on the weekly chart, you got it. COVID hit. That was the last time you had the RSI touch this the 30 level down here. And obviously time's different. I do not expect that. That cannot happen again because Powell can't do that. He flooded the system. He and DC and the Fed, both fiscal and monetary stimulus combined. Obviously, we know in hindsight, and myself and other critics said too much, especially here, they kept the pedal to the metal. But anyway, that can't happen again. At least that stimulus can't happen again. Anything's possible, but I really doubt we'd see anything close to that in the market. That's a very unusual move. XLP, again, I know I might sound redundant here, but this is another sector. We're breaking down the 11 sectors in the S&P 500. There's a big one right there. The pre-COVID highs were right here, but this was a major top right here in late 2021. We had some consolidation there. Then when we broke it, we back tested once, twice, three times, and then boom, hit that again. That was a target I had. Again, hit to the button. This is why I could not help but reverse and go long and maintain until those lows are taken out on a lot of these sectors. I'm gonna hold that or some of the developments I told you on the 60-minute chart, but I'm gonna hold that those long positions. XLE energy sector. Told you this one, harped on this a few weeks back. About a month ago, started saying it was my favorite sector of all of them because it's the one that hadn't dropped yet, and it would be a crowded rush for the exits, and that it most certainly was. But I told you the other day we hit nice support. We hit the uptrend line right there, and then just below that I told you we had support at 70.50, which we hit as well. So I still have additional targets. I still think they'll be hit, but again, it's a matter of risk reward. This was a strong, swift move down. If you caught even just a part of it, you did very well. Even better on XOP and DRIP and XES or the coal stocks. But again, I'm covering this because it's one of the 11 sectors in the S&P 500, but the weighting is much smaller than it used to be, so it's not moving the needle as much. I might not have, I don't know when the last time I updated these were. Well, you can see I updated in June. Looks like in June, unless maybe when I move it. Yeah, that gives me updates. So I take that back. I don't know when I updated that, but it wasn't that long ago. I think it was in the last few months. All right, and that's it, XLU. But here's the point. These don't move the needles much, but you can see a lot of these guys hitting support and bouncing, right? And also a lot of those putting in, see that? Nice divergence, positive divergence. Too many sectors, too many key stocks for me putting in divergent lows on the daily chart and falling to support for me to stay short and for me to not be long. As a trader, I got to capitalize on opportunities that I think are there, and that's it. So now I want to show you, well, the 11 sectors I didn't show you is basic materials. That's crapping out because again we broke this box here right there, and then boom, 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 boom. But it's also hit a target, a support level 72.45. So and it's oversold. Basic materials will probably bounce soon as well. Okay, now we're going to look at IYT. Now this goes back to the video. This was from my same video. I did a stock market. It's labeled stock market and sector analysis, dated published on April 5th, 2022. And I was covering at that point in time some of the sectors that stood out to me, including this one. This is the IYT, and this is you're seeing the video that's going on right now. I just hit play. I'm boxing that in, talking about how that was a key area, like so many sectors and indexes. And then this level, I said break of that level was going to bring us down and trigger a swift sell-off down to my next target here, which is that line right here, which I'll get to in a second. Let me just, you can see, and then I cut the line right there. That was the level it needed to go, which it okay, that was then. This is now. Here's IYT transportation sector. So there's that trading range I was harping on back in early April. There was the weekly close, solid weekly close right there. And then, like as expected, a swift move down right to my first target, that 205. That was that line there, which again was the top of this multi-year trading range right there. We took it over, and that was hit. So the takeaway now is not that, hey, great call, and I even laid it out as a short trade, so take it on that break, solid weekly close, and you would have swung that down and done nice on the transports, hit that level. But here's the thing, we're at support, we're oversold. It's the first time we've been oversold since COVID. We're at very good support. That is good support. We've had, that was the top of that trading range. It went for almost 2 years right there. We had one little whipsaw down below, then the big drop at once we broke it again and COVID hit. So COVID wasn't again a random. It will always go down in history as a black swan event. But again, there were a lot of technicals that said, divergent highs and trend line breaks and support level breaks like this that were all set up. So the market was set up for that drop. It just happened a lot faster than it probably would have played out had it not been COVID being the catalyst. And I would have certainly gone on longer if the Fed didn't step in and do all this. So this has just brought us back to really where we were before COVID hit in many sectors. So that's the takeaway. Just showed you 11 sectors in the S&P 500 plus this one. IYT is a transportation sector ETF. Many of these stocks are in the S&P. That's not one of the 11 sectors. And then we can further break it down, and I did that in that video as well. You have subsectors. Really, the main ones are trucking, railroads, and airlines, and then you can include the shipping sector in there. But let's look at trucking first. No particular order here. DJUSTK, the Dow Jones U.S. Trucking Index. And again, when I do this, I don't mean to be repetitive. I'm not trying to beat a dead horse, but I always use that analogy, like building a case, as a prosecution, trying to put a criminal away or an alleged, the accused. You have to build a case. And the more evidence you have, the more likely you're going to get a conviction, right? And so for me to be long the market in a bear market, I need a lot of evidence. And the evidence is I'm showing you sector after sector, stock after stock at key support, key long-term targets. This is simple stuff, guys. Really is. See that divergent high? That led to that big drop. That was a big correction, by the way. There was a divergent low right there in 2020 COVID hit. It wasn't random, positive divergence, just like you had negative divergence before that drop. And there it was, obviously aided by a lot of stimulus. And then it all ended with, again, not random, nice divergent high, big negative divergence, and then the breakdown and a back test of the primary uptrend line, and then boom, right down to that support level. And so you see my additional targets. You see where I think we're going before all said and done down here. But we are at support now. And Trading 101 says you either buy a drop to support or you wait for a break of that support to go short. That's it. Let's not overthink it. So there's trucking. You also have, let's see, we'll do the railroads. DJUSRR, that's I know it offhand, DJUSRR. I believe, yes, in that video I highlighted, I had this exact wedge and trend line there, and we broke it, and that took us right down, look at that, right to support on DJUSRR. So there's a railroad. So that's what somebody inquired about, the railroad index, and that's why I would not short trannies or railroads. In fact, I'm more apt to be long. I'm long tech stocks. I think you're going to get more bang for a buck. But and there's the next target. So to me, again, it's just a matter of how's it going to play out before we go down to that next target. And I think we're looking at right now the odds for a bounce. But I showed you some things in the beginning of the video that hey, some sectors are a little bit below support, and if these that are on support break, sometimes that happens. You don't have to have a bounce on the initial tag of every support level. Sometimes you go through those. And so I'll be watching for that. And then finally, what did I cover? I gave you trucking, railroads, and let's look at the airlines. XAL is the airline index. Looks like death. This is a weekly chart right here, right? Bearish rising wedge. That was a divergent high. Beautiful. Look at that short entry right there. Bearish rising wedge breakdown. Never made it back up. Rejected at this level several times right there, and then boom. So the weekly chart looks like death, but you go to a daily chart and you have some support here. This is here, let me turn on the level, make that line a little brighter. It's about 52.67. It's not super solid support, but you can see these all these reactions here around after COVID hit, and then the back test of that level. And you've got some divergence on the RSI, bullish divergence. See that RSI making higher highs. Actually, equal highs there on the PPO as well. So you have positive divergence. So that's it. Alrighty. Last but not least, we have the shipping sector. So we can look at that. Shipping. We'll look at this one here, shipping and ports. And you can see The negative divergent high. This one held up. The shippers have been strong, unusually strong. But there it is, 24.10. We took that out. That was a big level, but now we're at uptrend line support right here. Uh, my guess is a bounce. I do see more downside, but it's if the market bounces, we'll probably see some of those bounce. Maybe, maybe not. I'm going to stay out of them for now. I'm going to rifle through a handful of them for you, just to kind of show you what they look like here. But that's what I'm looking at there. So I still see whether we bounce here or not, and it's looking a little precarious. It's right on that trend line now. Again, probably get a bounce, but if not, we could carry all the way down here to that next target about 1975. That's about 14%, and then ultimately down there at about 1682, and that'd be about another 27% from where we're at now. I haven't marked these charts up, but I have several watch lists of shipping stocks, and you can see TNP, for example. I'm going to brighten this line up. It's already had a big correction. This is why my answer, I wouldn't short these guys now. I wish I would have. I had been watching them, waiting, and I just focused on other things. So that's fine. I missed this one, but I would not short it here. If anything, it's going to bounce soon. We're coming up to support. You can take that one for a bounce. I'm not crazy about it. Ultimately, there's big support down there at 7. But again, the meat's already been stripped off this bone, in my opinion, most of it. TNK, a lot of these lines I've had here. You can see this one I did. This is created that one back on May 27th. That uptrend line rising wedge. I just didn't have price alerts. It took it out, and look at that, boom. Since it broke down 20%, but it's already to what would have been my target, that uptrend line right there. So this one's ready to bounce too. TK, just a hair below its breaking support. Could keep melting down, but I suspect a whipsaw based on what's going to happen here. STNG, Scorpio Tankers, look at right back to uptrend line support. It may break that and go down. Again, I'm watching these for now. I'm giving you the charts if you're interested, and obviously people are. That's why I'm doing the video. I had some inquiries about these. But look at that. That one's pulled back to trend line and very good price support. See this here? There's one of those ascending triangle patterns right here I was talking about. You have a flat line there and an upward trend line. Gives you an ascending triangle pattern, just like we have in the markets. That one, there was your breakout candle, broke above the pattern, and then it ended with that divergent high. So, and now we're back to where we started. It's back testing the bottom. So boom. So if nothing else, I just made a case to go long these guys here. If I would have been talking to you about them a few weeks ago, if I would have had alerts set on all those trend lines I created, there's one that just broke down. I mean, if you want a short one, that one I like better than the rest. Again, I'm not taking them right now. Just gonna watch the sector if I see an opportunity elsewhere. And look at this, nice little bear flag too. Move down, flagpole right under the primary uptrend line. It's bear flagging, and it broke both the bear flag and that $26 support. But what happens is birds of a feather tend to flock together. I've got too many of these guys at support. Therefore, this is a bear flag. Normally, this is a beautiful setup. I'd be all over shorting that, but if I have too many stocks in the sector, the transportation stocks at support, and I can make a better case to be long most of these than short, I'm not going to take this short one, this one short, because that bear flag is probably not going to play out as such. It could, but again, and if you want to short it, just take it. And here, I'll go back to that real quick. If that's your thing, yeah, there it is. Just there's your bear flag. It has no business recovering the bear flag or the trend line, so you could have a stop, a relatively tight stop. Try to swing it down there to that 1786 support if you want. All right, I'm going to wrap it up here because I can go through these over and over and over. And if I do, you're just going to see the same thing. So a lot of these at support or near support. Some breaking down. And I'd have to really study the charts further. And if you guys want that, any of you out there that want to trade this sector and want me to highlight some of my favorites, I will, but I just gave you my thoughts. Too many mixed bags in the sector, too many charts, stocks, I mean, coming up to support, short setups that look like they've already played out, possibly to their fullest extent, at least to the initial leg down before they're due a bounce. All right, so with that being said, you know the levels to watch in the equity markets, you know the levels to watch in these sectors. I'm still near-term bullish, but cautiously bullish was the right word. And then finally, I started the video with NQ, told you we need to take out the recent highs. But remember, on ES, the S&P 500, we've got a little more work to do. I just wanted to mention that again. I gave you this level already. It's about 38.50, 38.55, and there's that little Maui low, that little fake out move. Remember, we had a double bottom there, a little whipsaw move, followed by a nice rally, nice tradable rally. Then we set up this trading range. We broke that trading range. We fell down. So if we can pop this, I have minor support here, 38.15, but the bigger level there is about 38.50. And if that gets taken out, it should be a pretty swift move up to that this target I have, which is the primary downtrend line on the 60-minute chart, and that 40.73-ish level. They come in roughly together. So you're looking, if that target is hit, we're looking at about initial leg up, and this rally would be about 8%, 7-8% or so. Of course, watch these lows. We could crap out here, and then some of the sectors that are already below resistance will have back tested and failed, and this would most likely cause those others that are right on resistance, support, on support, I said it right the first time, the others have broken support, which is now resistance. And then those that are on support, if the S&P breaks down, then they're going to break as well. So stay flexible, guys. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.